Good afternoon, everybody. Welcome to the After Market Monday webinar. We're going to cover real quickly, do some items. I'm going to have to put the, I will check I'm working off of one screen this afternoon, so I'm going to put everything kind of out of the way for a bit. So if you have any questions, I will be basically checking those before we close, because this session is going to be very quick. The way in the Aftermarket Monday is intended to be all materials are presented for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Get a highlight of where we're sitting as of today with the market. Market pushed up, a little bit of a mixed market. We've got market basically at resistance. Everything looks, overbought and all that kind of stuff. And so I'd like to see about a week's worth of pullback, and then roll into the first full week in December. That be the trigger to go into the Santa Claus rally timeframe. We'll see if that takes place or not. So from here, we want to basically just roll through and look at some of the other things. The intention of today's session is basically to provide timely, actionable intel on beginning of each week. That's the intent of the Aftermarket Mondays. Market review, stocks and ETFs setting up. And then just a reminder, the 2018 refinements that we're making the active trend system for both basically all members, those who would just subscribe to the free newsletter, but also the premium members. I am working on getting out that composite watch list and an analysis. What makes up the composite watch list? Every stock that made it onto an IBD watch list for the previous week will go on that composite watch list. Then that will be sorted down, basically looking for entities that are on more than one watch list. That's going to be our sorting criteria. And then from there, we'll go into sorting based on what's closest to the 8-day moving average. Where's the TSI on some of these to see if it is in an oversold condition, so that we can highlight and spot those low points to be able to provide timely entries for our premium active trend trading members. But I'll provide the overall analysis out to everybody who is signed up to, as an active trend trader, both the regardless of the level of service. Enhanced portfolio building trades. I've been working with Lee Tanner on this, getting some basic mentoring from him about how he builds a portfolio, and we're going to be utilizing that going into next year. We're actually already using that right now. That's why we're sitting with AEIS, where we've added to the position with the expectation of moving forward. Then simplified training opportunities. We're going to be doing some module type training that will be available on the website for the premium members, and also a training site, module training site for members who are just becoming premium members. So it'll get you up and running very quickly. So that's the intent of what we're working on. And Mike Traeger and I are also working on some deals with the early warning alerts. Expect something out on that by this weekend. And so one of the things I'm looking at is here we are. We're in November. Is the Nasdaq and the Nasdaq and the Russell going to pull back and get a bounce? Here's where we are. And so as you can see, the Nasdaq tends to get a little bit of a pullback into the early part of December and then rally from there. So we're looking for the final shot for the rally from their part for the year. Oftentimes that rally from here point will last into the first part of January, where you can pick up a good 2% in January. So if we can pick up a good 4%, this is on the regular NASDAQ, 4% prior to or going into January, and then another 2%, that would be a good way to start out 2018 with some winning trades. So, and we'll be continuing to keep our eye on the concept of the concept basically of the seasonality of the individual entities that we're looking at. Okay, here's the go-to list, or the no-go list that we've pulled out. I have no signals going on whatsoever. We are long play. We're long AEIS. I've added a stock called WNC to the no-go list, but as you see, no setup triggers based on the TSI at this point. And for the premium members, you will get this probably this evening. I'll post this onto the website for one of the pages that is for premium members only to kind of fill in the blanks on where I'm anticipating moving things. The WNC stock is kind of an interesting one. It has been on the IBD 50 in the past and throughout this year, but it's stuck in a range that is very interesting. It's stuck in about a 20% range, and it has run within that 20% range three times, I want to say three times, since April of this year. And that range is down around $18.50 for support, up to about $23 for resistance. And if you do the math on that, that turns out to be about 23%. So keep your eye on that one. What else we got going? Okay, stocks and ETFs that are potentially setting up for November 20th, the week of November 27th. One, the tax bill is key to a year-end rally, I believe. If so much of what the president wanted to get done in his first year has not gotten done because Congress and the Senate just basically can't get out of the way. Very disappointed with the lack of performance across the board there with those guys. Seasonal expectations this time of year, of course, is the Santa Claus rally. Oftentimes lasts somewhere between 3 to 4 weeks, and also often extends into the January timeframe. Looking for ETF setups, waiting for pullbacks is what I'm doing right now in that. We are long currently. The other thing we're long, and I forgot to mention that, is we are long Nugget right now. So Netflix, NVIDIA, Tesla, those are basically three of the stocks that are kind of go-to stocks that we're continuing to carry on into the end of this month and probably into 2018. I will, in January, be placing positions for Strategy 3 in Netflix, NVIDIA, and Tesla, and SPY, which isn't shown here. I have no catfish specials right now. Others on the radar are WNC, AEIS, and TEAM. TEAM. TEAM's an interesting thing. It is close to an IBD type breakout, and I am not an IBD kind of breakout kind of guy, but it is worth taking a look at. So let's take a look at it. Let's go over here to the, and so that's where we'll leave with that. And then just a reminder, one is what Jesse Livermore had to say. And if you're watching this video and you are, this is a video, you're not an active trend trader yet, please go to this point and just register for the free access as an active trend trader. This is the basic entry point for becoming an active trend trader, and I'd like to invite you to do that. And this little place up here, probably some of you may recognize this. This is out at the Koalina Beach Resorts here on Oahu, looking at one of their coves from the Marriott properties. And I thought that was really cool with the little rainbow there. And we had some points that we needed to get rid of or were going to be taken away from us. And so my wife and I are kind of, this is the view from our room right now. It's a motivation to be able to continue doing that. So, but this week it's a little bit chilly in that a lot of folks from the mainland are running around here with sweatshirts on. And Andrew, I know it's probably chilly up there in the area where you live also on island. But yeah, it's just wintertime in Hawaii, but it's overcast, rainy, a little bit of a, the wind chill's about 10 to 15 degrees. So, in your normal 80 degrees, it's, feeling like it's 65. And I know you guys in the mainland are going, oh, I'm so, you're probably not feeling our pain here. And so, Yeah, I'm crying for your cold. There you go. All right, okay, let's look at some charts real quick, and then we'll call it a day. There we go. Let's take a look at this chart here. And I'm going to take this, and I'm going to, where can I stick that? There we go. Let's take a look at these particulars here. Here's Nugget. Again, we were in Nugget as of about $30. And so from about here, it's starting to run up. If Nugget gets a good pop up through through the 50, then we're probably going to get a really nice run back up here to the 36 level. It does have some resistance about the 3230, 3250 level. And so anyway, we're in this. The thing that I like about gold right now, and especially the gold miners, is I like this little aspect right here. On a weekly chart, we're getting a nice crossover of the TSI off of a strong support level, which is around the -25 level, which oftentimes goes on to spell a move up. And like I said, a move up here, from where it's at, just back, even if it just traces back to the 40, to this area here, which is about $44 or even the $40 level, from current levels up to 40, we're looking at a move that is about, where do we say? Let's say if we get up to the 40 or even, okay, $36 level, we're looking at a 15% move. 40 level, we're looking at about a 29% move. And that's exactly why we chose the leveraged gold miners as a potential trading vehicle with the 4 industry and commodity ETFs that we trade on a regular basis. And so this has the opportunity for a very nice move. Let's take a look at a couple of those stocks that I had mentioned previously. WNC, and let me get rid of that. Okay, what WNC is doing, guys, is it's basically it's called a channeling stock. It is basically in a consolidation mode. However, what's interesting is the consolidation mode on this turns out to be about $18.50, maybe a little bit less than that, where it's coming down or even, earlier in the year, back in April, it got up to just down to $19 and then made runs up into the $23 levels, $23.50, 23, almost up to 24. Now it is kind of slanting down. However, it is in an area where it tends to bounce. And so where would we expect it to run? Well, it probably expected to run back up at least into the 22.50 to 23 area. And for current levels, what would that equate to? Let's see here. Let's pop up this. And from current levels, if it ran right back up to the 23 area, let's say 23 is right there, we're looking at about a 20% gain. And so, as I said, it's done that once, and again, twice here, and then 3 times it's made that approximately 20% gain. And so when you can find a stock that's doing that, as long as it continues to do that, it's a channeling stock. Some people might call it a rolling stock, but it's something to be aware of. It's got pretty good, it's got great daily volume, a little bit over 500,000. And as you can see, this pullback that it's going through right now is going through on less than average volume, which is a good point. And so anywhere in here, this is one of these where you could almost just place an order down if it dropped below 18.50 to buy it when it was popping back up through 18.60, $18.60, with a stop immediately below that, down around, we could put a stop down, just below the 18.37, make it $18 level for the stop. And then size your position appropriately, and then expect a move within a certain period of time, like it week-wise, it took 1, 2, 3, 4, 5, 6, 7, 8 weeks to run up 20% from here. There we go. So that's about 8 weeks there. Took about 7 or 8 weeks to run here, and this one was a little bit faster, but it was when we started rebounding here. So just keep that in mind. So WNC, good one to keep your eye on. The other one that looks interesting is Team. Okay, Team. What it's got going on is just basically a high and tight pattern that's going on. This is an IBD breakout, potentially IBD breakout. And the IBD breakout trigger point is $53.55. That's all well and good. Now, that it may break out, it may not break out, but another area that I like is when it comes back here and tests its past breakouts. Where does that? Well, it does that at around $50.91. As you can see, it came in and bounced off that and hit its butt there several times. 1, 2, 3, 4 times, and then it's just hovering just about 51.29. And so what one can do is just say, okay, if it retests back down around the $50.60 level and then rebounds back through $50.70, I want a piece of this to go and trade to the upside, and with the anticipation that Team is going to rally from there. If it fails, okay, let's say if it drops below the 20-day moving average here, well, that could be our trigger to go ahead and exit, because its next level of support is down here, of course, and that would be, from current levels, that would give you a level of support of about 7-8%. I mean, if you're doing a straight, since we're doing a bounce, I'd be looking at 5% stop loss or below that 20 line. So there's 2 stocks that look very interesting. Let me see if I can pull up. Here, we'll just run through the other entities. SPY, no, not Team SPY, just SPY. There we go, spiders. Emulating the S&P, of course. Interesting. Take a look at what's going on here. We're getting a really nice daily negative divergence. It looks as if we're putting in kind of a double top on a weekly basis. We have a spinning top doji. Those of you who are trading this with me, I did a strategy 2 trade on this today. I risked I risked 46 cents to make 50 cents. That's basically selling the 260 call, or selling the 260 call that expires this coming Friday, and buying the 261 call, and there was a delta in there of about 54 cents. And so I made 54 cents. I sold 5 of them and this is part of our strategy 2 trade of trying to generate somewhere between $500 to $1,000 in cash flow each week. And now if we break 260 and run down to, bounce off these moving averages, I'll take out my profit at the 25-cent mark and the 10-cent mark. In other words, I won't wait for it to run, to expire at 0. I'd rather just take off 50% of the profit at those specific times. Hold on just a second, please. Okay, there we go. So that's the SPY. Again, negative divergence on that, and that was one of the things that led me to go ahead and say, hey, let's look at this as a potential topping pattern, and let's see if it goes down. If it doesn't go down, that's fine too. The IWM, again, if it plays into our position that we're going to bounce going into the end of the year, December starts over here. So we could get a nice 3 or 4 day pullback into the moving averages, or even down into the 50-day moving average, and then get a rebound from there. We did have a past breakout, and so if you threw on a fib retrace on this entity right here, go from here to here, okay, your 50% retracement would be down about 148. And so just keep that in mind, that any retracement back around 148 would be 50%, and that normally, according to Charles Dow, you get a 1/3 to 2/3 retracement after a good, healthy move up. So that's going to put it in that range. Just keep an eye on that for a potential trade to the upside, what will I trade it to the upside? TNA, of course. And watch and see if that comes down. TNA and IWM are close enough where if you're trading the fibs, you could actually trade the fibs off TNA. I like how we are rolling over. We do have a negative divergence, but the longer term market forecast, the intermediate portions of it at least, are showing, getting down towards the reversal area. And it would be interesting to see, true strength, or the true strength index. Basically, we could roll over a little bit, and then the TSI could tick back up just as it approaches this zero line, which is a strong level of support. Let me check and see if we got any questions here. Okay, yeah, I will, Eric. Okay, and then that's QQQ, of course. Again, similar type situation. It has negative divergence, pushing higher, and so, which shows that's what negative divergence can do. But when you get a failure after you've pushed higher after a negative divergence, oftentimes that's indicative of a failure that will be more substantial than the past ones. Recently we had this top, so we had a double top on the TSI as we pushed higher. Now we're not pushing back with the same momentum. Therefore, if we get a move to the downside, that move to the downside could be more significant. Now, when I say more significant, what am I looking at? I'm looking for basically maybe a retest of the 152 or a retest at the 50-day moving average. So I've given you two stocks to take a look at. I basically want to respect everybody's time because we try to keep this, we've already gone past 10 minutes, so I'll go look at one last thing. FLLX, Netflix. Okay, Netflix. And what's your question on the trade we did, Eric? Last Friday, just prior to the close, what I did was I basically opened a trade in Netflix with the expectation that we were going to bounce from here, about where this trend line is, or the 820 combo, which is above the 50-day moving average, that this uptrend was going to continue moving into this week. And so what I did was why has it gone negative? Well, it's gone negative because I sold the 197.50 and I bought the 195 call put on this. And as you can see, we came off a little bit, and so it's gone negative simply because one, time value has come off of each of the position. And also we had a little bit of a slippage, a 70-cent drop in value today. And that's one of the reasons why it went negative. When we sold it, I think we sold it for, gosh, what did we sell? I think we sold it for about $1.20. Yeah, thank you for a reminder. So we sold it for $1.20, which what that means is, and the delta there between 197.50 and 195 is $2.50. And so part of the reason for that it's going negative is because it is, as it sits right this moment in time. Let me go back to that. So taskbar. Let me go back to that picture. I'm going to have to go back to this one. So, so as you can see, today's movement just kind of danced around here and bounced off the movement, off the trend line, and it looks to be rebounding right now. So the rest of the reason is that, okay, the value of since it lost 70 cents, the value is now closer, the delta between the two is closer to the actual $2.50. And so our dollar, the $1.20 that we took in, of course, is showing as a negative. And if we were to buy it back, we'd have to pay $2 for it to buy back what we had sold for $1.20. So that would be showing up as a losing trade, or it would show up as a negative. Does that help a little bit on understanding what's going on with the spreads? Okay, now as it moves up, let's say we break out of this area here. I'll just draw a little line across here. Let's say we break out of this little flag that's going on here, and it moves on above 190, above 197, 197.50, closer to 200. Then it will very rapidly lose value because there's only 4 days left in this week for that option chain to be alive, and so it will start losing time value very rapidly, especially after Wednesday. And so this is where, I'll buy that back for, I think I said buy back for somewhere around 60 cents, buy part of it back, and then hold the rest of it to buy it back where it's worth about 15 to 20 cents. And again, that's one of those things where I'm not going to hang on to it till Friday to see if it goes to zero. I want to take my profits off the table as it moves in my favor. Now I am willing to risk the approximately $2.50 up front to make sure, to see what happens with it, because that's just part of the way I'm doing strategy number 2. If I get close to a 1-to-1. Okay, guys, that's it for today. I want to say thank you for joining us, and we'll see some of you on Wednesday night and the rest of you hopefully back on Friday. So God bless everybody. Have a great, great Monday and a great, great week. Hi, this is Dennis. You've just watched a recording of one of the 2 free webinars that active trend traders do every week, one on Monday, one on Friday. During these webinars, we will be introducing and showing bonus trades for all active trend trading members, both the premium and the non-premium members, but you have to be signed up as an active trend trader. There's no obligation. Just go to the link here that says forumsaweber.com and you can sign up. Look to see you soon on one of our webinars. Aloha!